Taxes are one of those things everyone hates. They were created as a way to fund the government temporarily for wars, but as everything that is temporary, it became permanent, just like the 401k. People are complaining about the amount of taxes they get deducted from their salaries, which is most of the time the only source of income they have. But they don't see the bigger picture. All the other taxes we pay just by breathing air in this country. Now they want to make it even worse. So in this video, I will explain to you very easily how much taxes you pay according to how you make your money and how this Fair Tax Act will destroy you if it's approved. So stay tuned. Hi there, my name is Jaime Shekaibe and I welcome you to my channel, The Foreigner in America, where I teach locals and foreigners everything they need to know about producing money, keeping money, and multiplying it, specializing in the markets and real estate. So if you're someone like myself who loves money and wants to be successful and free, please subscribe to this great channel and hit that bell so you follow up on my 2 weekly videos. Also, check out my blog, Instagram, and TikTok under the same name. And take a look at my book, which I will leave a link below for you. So without further ado, let's begin. Why do we pay taxes? Well, during the Civil War of 1861, a first tax was created. Congress set a flat $300 tax on incomes over $800 per month. From there, everything started until now. Although people always complain about the amount of taxes they pay, let me tell you that if you only concentrate on income tax, with the average salary in the US of $53,490 a year, the taxes you will pay is only a little bit over 16%. But as I told you in the beginning of the video, the tax on salaries is only one way the government gets its money. There are a lot of other ways. Let me explain. You get taxed when you receive income as a person or EBITDA as a company. As a person, any money that enters your bank account that is not dead, meaning a loan, is considered income. If you lend $5,000 to a friend and he pays you back, that's income. If you sell your car, that's income. If you teach a class and they pay you, that's income. The IRS taxes income on a personal level with what they call federal income taxes. So I live in Texas, so there is not a state or local tax like other states, but let me explain how they get you. When you receive your salary, it's already after taxes. The company held the taxes for you. Then you go to the store and buy something. That thing has sales tax, which here in Texas is 8.25%. Most of the food is tax exempt, by the way. The price you see is the price you pay. Then the government charges you a tax to own a car, which is the registration sticker, and charges you property taxes on the house you own. So you get taxed in your income, then when you buy something, and then if you sell that thing and also own a car and own a house every year. The federal income taxes go from 11% to 37% according to your income. Those are the biggest percentages and very hard to dodge. There's another tax called capital gains tax, which you have to pay for investments that you held for more than a year, like stocks or real estate when you sell. Stay with me. This is the fun part. Let me show you the cash flow quadrant from Robert Kiyosaki, his best book ever. 4 main ways to make money and how it's taxed. Let's say you make $1 million. You killed it. In the employee category, the worst for taxes, you will be charged 35.9% in Texas, plus state and local taxes if you live in another state. For self-employees, people without a business making money on their own, you will be charged the same as employees plus a 7.65% more for FICA. So 43.55%, that's a lot. In the sunny state of California, you will pay a 10.49% more than that. So 54% tax, making $1 million on your own. If you're a business owner in that category, the B category, there's two ways you can pay tax. You can pay tax as an LLC or S Corp, which you will pay the same taxes as self-employed, or as a C corporation, which pays a flat rate of 21% on EBITDA. This means money coming in minus money coming out equals EBITDA. And that's what is charged 21%. As an investor in the lower right quadrant, you only pay tax when you sell. If you sell something before 1 year of ownership, you will pay the same tax as a self-employed, which is horrible. And otherwise, the tax you pay is capital gains tax, which is a flat 20%. So, if everything is so straightforward and complicated, why do they want to create a Fair Tax Act that eliminates income taxes in the IRS? Well, what they're saying is that they want to eliminate the tax brackets and include a tax on everything you buy. Wait a moment. Everything I buy today has tax except food. So they will add tax on food? Not necessarily, but everything else will just skyrocket. Imagine you get your salary 100%. You make $60,000 a year. And guess what you get deposited in your bank account? $60,000. So beautiful, right? Nope. If you want to stay home and never come out in your life and never buy anything online, maybe. But the moment you open Amazon and try buying something, guess what? It will be 20 or 30 or 40% more expensive because of the tax. So your 60K or 80K will not be worth anything. The only satisfaction you will get is the day you receive the money or your payday for a split second, but it will be miserable all year long. Another problem with this is what happened in Europe when they changed the local currency to the euro in every country in the European Union. This is very interesting. Stay with me. And give me a like and subscribe if you like this info. Let's say you lived in a country where your currency was peseta or lira or franc, and they come up with this great idea of standardizing all into the euro. For some reason, and someone you don't know comes up with a conversion rate of 5-to-1. So 5 of your local currency equals 1 euro. So everything will divide by 5, including your salary. And this is what happened. And the reason living in Europe is not the best thing in the world today. You were making 50,000 local currency before, and now you get paid 10,000 euros, right? 5-to-1. You go to the market. The pound of ham that was 5 units of currency, now it's 2 euros. The car that was 50,000 units of currency is now 12,000 euros. Companies used this conversion from local to euro to increase prices substantially and make more money because people were slow to make conversions. They used them. Very sad. The same thing will happen here in America if you implement this Fair Tax Act. Let me know in the comments if I'm mistaken. Every tax increase will be different per product. It's not a flat rate by state like the sales tax. So you will never know how much things actually increased. You will go buy something like a car and it will be substantially more expensive. The car manufacturer gets an order from the government to increase price 15% to collect taxes. What they do? They increase it by 25%. When people complain, blame it on the taxes. You pay 15% to the government and then you pocket the extra 10% for the company's EBITDA. You make investors richer and people poorer. Great way to help the country, guys. I think this is more political than anything and it will never be approved, thanks God. But if they really wanted to help people, what they should do is eliminate state and local taxes in all 50 states and reduce the federal income tax brackets. If it's 10% to 37% today, well, shave it off to 5% to 21%, just like corporations, or 25%. And the missing money the IRS will not get, they can get it from lowering deductions from companies. Don't eliminate deductions, just lower them until you get back your money. Oh, but companies will fire a bunch of people. They will fire them anyway. Look at what Google, Apple, Meta, Twitter, and other tech companies are doing now. Massive layoffs happening. And taxes haven't changed a bit. So no, punishing people every time they take cash out of their pockets or a credit card is not the way to improve this country. This will make people not spend money and it will shrink the economy. Incentivize people to spend money by reducing their taxes, not increasing them. If a big corporation can deduct 10% of their taxes out of the 21%, well, reduce that to an 8% and pocket the difference. There's billions of dollars overseas today that can be brought to the US only if you incentivize corporations to do so. What I encourage people to do is two things. One, make more money and forget about taxes since you have no control as long as you are in US soil. Two, hire a tax accountant if your income is not only a job, so this person can save you some money. Remember, pay your fair share of tax, but never leave a tip. But remember, take control of your life and take control of your money. Thanks a lot for watching this video. If you enjoyed it and found useful information, give me a like, subscribe, and hit that bell so you don't miss any one of my 2 weekly videos as soon as they come out. So have a great day. Don't lose any money, and I'll see you next time.